From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for April 22nd, 2016. Today we're going to be taking a look at the AUDUSD, the Australian versus the US dollar, for today's trade opportunity. Taking a look here at the daily time frame, we can see that this currency pair has clearly been in an uptrend for quite a while now. We go all the way back into mid part of January where it bottomed out down here into the low 6800s, and it's been rising ever since. A few days ago, we broke through our previous resistance high. You see the resistance here at 7,700. A few days later, it pushed through that resistance at 77 and went all the way up into the low 7800s. We found resistance into the low 78, 78.10 is the red line at the top of the yellow shaded area up here over the past 3 days, and has now begun a little bit of pullback or retracement. In the trade room, we've been talking about the fact that it's difficult to suggest buying at the very top of a trend. Buying at the very, very peak high of the trend doesn't provide good risk versus reward. Your reward is capped right now at the 7,800 level and has been unable to continue higher from there. So if you're looking to buy within an uptrend, it's always more prudent really to wait for a pullback, a dip back down into a lower level before you buy it. It provides a better investment for your money. And so what you're looking for is a pullback. So that's what we're seeing today, a little bit of a pullback for the Australian dollar. So as it approaches that same historical resistance at 7,700 that we're now looking at as potential support, we look for an opportunity to buy it in the direction of the trend. Now, all the while, we want to watch for clues and evidence of resistance and reversal, and those are some of the things that we have talked about also in the live trade room. If you decided to go short on this currency pair from the resistance, you were looking to do that closer towards the yellow shaded area, and as it goes down into the support is where you're looking for an opportunity to go long back in the direction of the trend. We have a couple of things here. We have the rising red trend line here, which would give us a clue or boost to the area of support. We see 7,700, that round handle there. We see the historical resistance high. Let's take it on down to the 4-hour time frame. And as we get down here, we can begin to devise maybe some other clues and evidence of support into that green shaded area. I'm first going to take Fibonacci from the last significant low that we see down here towards the 7,500 level. Just this low right here where the orange shaded area is, where actually it touches the red trend line, and go to the most recent resistance high. So I've gone from the low, again, where it touches the, or comes close to touching the red trend line, to the highest high. And interesting enough, the 0.382 Fibonacci retracement level lives right there at 7703, basically right on top of our green shaded area. So if we're looking to go long and buy the currency pair in the direction of the trend, this retracement level, the 382 of the most recent leg of the trend, sits right there at the green shaded area. So that becomes a clear opportunity to do so. So if we're looking to buy it, right now the current market sitting at 77.40, it needs to go down about 40 pips before we look for an opportunity to buy or go long. I could probably even take this and zoom it in a little bit more like this, and we can take a trend line somewhat like this from that same low and connect it here. And we can see we are struggling with that shorter term trend line, so we'll have to wait to see if it can break through there and even challenge back down here towards the green shaded area. But that becomes our next potential opportunity. Let's take a real short fib. Let's take Fibonacci from the most recent low, which is basically the low for this week after the market opened up at the beginning of the week, to the same resistance high. And what's interesting enough is we now see the 618 fib of that shorter range sitting here at the green shaded area just above the 7,700 level. So if we're going to go long in the direction of the trend, then we're looking for it to touch back down towards 7,700 today, becomes our opportunity. We know what the risk is. If we go long there at the green shaded area, our risk and our stop loss should be underneath the green shaded area. That's the risk. Is the fact is, if it breaks underneath there, it's likely going to continue to pressure a little bit lower, even down into the low 76s. So definitely know what our risk is. We know what our potential profit then becomes, which would be back to the last high, and that becomes our opportunity to go long in the direction of the trend for the Australian dollar. One last thing is, again, we could be watching for clues to resistance and reversal. So if you're looking for just the opposite scenario, I think you want it to be as close as possible to the last resistance high. Our last resistance high provides the risk up here towards the top of the chart, and that provides us an opportunity to go short on any rallies towards the orange zone. So if you're looking to go short, let it go up. Get closer towards 77.75, as close as possible to the 7,800 level. That becomes your opportunity to go short. You know the risk is that it continues to go in the direction of the trend and break through that orange zone. So whether you're selling from the orange zone or yellow zone, or buying from the green zone, you have two different opportunities here for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.